to talk all about a couple of very important earnings. Thank you for joining us. We're taking a look here at both Dollar General and Dollar Tree. I wanted to first get your thoughts on each one of those. Let's start with Dollar General. What did you see inside the report? What does it tell you?
So Dollar General had a very strong report. So their top line trends were stronger than what we modeled. And on the bottom line, they also beat consensus estimates. So, I overall thought they had a really strong Q2. The concern out there was more on the guidance. They only raised their lower end of their guidance range modestly. And I think just given some of the beats we've seen out there from Walmart, Albertsons, and some of the discretionary retailers, I think the market just wanted more from a guidance perspective, and that's why you're seeing some weakness today.
So moderate low-end guidance, just not good enough. What do you think is holding back a name like Dollar General from seeing something better going forward?
Yeah, so I think, so if it's similar to other players out there right now, you have significant pressures on the cost side. So DG has done a great job managing through cost pressures the last several quarters. But in this current backdrop, just the freight environment, both in the U.S. and abroad, is just very challenging. So even the best operators are starting to feel some impact on margins related to those cost pressures. And that's what you saw today. I mean, DG, yes, they only modestly raised guidance, but they still essentially kept their full year range. They actually raised the top line guidance. So, as we look forward, I think expectations are really high here. But as you start to look towards next year, this is a company that we think that can go back to 2 to 4% top line growth on the comp side and double-digit EPS growth, just like they've done in the past. And I think that then gets the stock going again.
So that's possible. That being said, a day like today, earlier today, I saw a headline that said Dollar General down over 6%, on pace for its largest percent decrease since March of 2020. Is that a buying opportunity?
Yeah, we do. We think it's an excellent opportunity for longer term players. So DG historically, when they report results, I think the last 6 out of 7 reports, even when they've beaten numbers, the stock has gone down. So I think, with the stock too, sometimes there's technical factors on the day that report that pressure the stock. And I think we're seeing the same today. We have a $270 price target. And we think, as I mentioned earlier, we think the sales trends and margins should improve next year. So I think you do see the stock recovering. And I think the other underappreciated part of the story is there's still an aggressive unit growth. They continue to open up new stores at an aggressive pace within the U.S. So our core DG box, we expect them to open up several hundred of those next year. And they have a new concept called Pop Shelf, which we had a chance to visit a few weeks ago down in the Nashville area. And we think that could be a home run over time. So it's more of a discretionary Five Below type concept.
So it feels like a temporary bump in the road for a name like Dollar General, like many of the retailers, as you said, with supply chain issues. And then where does Dollar Tree fall in? Because sometimes in our minds, we just think of them both as discount stores. They're the same thing. Are they very similar or really not at all?
So they're different. I mean, there's some similarities. So say the Family Dollar banner is similar to Dollar General. But then within Dollar Tree, you also have the Dollar Tree banner where everything you get for $1. And you'll see today, Dollar Tree is down, more than 10%. And here we think there's some real issues with the report. So the core Dollar Tree banner, they've had a real difficult time growing their comp store sales. So now we've seen, for really multiple quarters that they've had trouble growing the top line within that banner in that 2 to 3% type range. And they do attribute some of their challenges just to reduce consumer mobility as more people are working from home. So, for this stock to work, we think you need to see a Dollar Tree banner rebound back to where they've historically grown. And we struggle to see that because we think there's some competitive dynamics out there, whether it's Dollar General doing a much better job on the discretionary side, Five Below, they've obviously captured a different consumer. So we think Dollar Tree's challenges are more related to competition. So we think there's some more structural headwinds that they need to overcome. And the second issue for them is it was even deeper than Dollar General. Unlike DG, which actually raised the lower end of the guidance, Dollar Tree again lowered their guidance pretty meaningfully due to freight pressures. And they import more product from abroad than Dollar General and many other retailers. And we've all seen shipping rates from China go up pretty significantly for containers. So Dollar Tree is very susceptible to those headwinds. And now that they've guided down for 2 consecutive quarters, the market is this story is now very much a show me story.
Right. I mean, they could be trying to give something conservative and then they could beat it later. But it just doesn't sound great, right? It just doesn't sound great, especially when you really need folks in the stores. And with the Delta variant, more folks are at home. And, are you buying that journal? I saw the video, that, composition journal or a greeting birthday card. Are you rushing to get those things online? Probably not. Those are more like foot traffic in the store, fill up your basket and get to the front and pay up. What's the final thought here when you think about shoppers, the consumer? I'm not sure which companies you cover, but are there any great retailers, or is it just that the consumer is great? You tell me.
Yeah, no, so we're right now very bullish on the U.S. consumer. So in terms of my top picks right now, Ulta Beauty reported last night. We think the beauty category right now is one of our favorite verticals. You've seen skincare trends pick up, and now makeup is starting to rebound. So we're very much seeing a roaring 20s type recovery within the beauty category. So right now, Ulta, Costco, DG, and Walmart are round out our top 4 retailing picks. And we think both grocery and beauty are really two areas you want to be in for the balance of the year and into next year.